Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the home office in Chicago on another very, very warm Thursday morning. We were just talking before the show here. It's mid-late September and still 85 in Illinois. Come on now. We need some rain too, by the way. Just keep that in mind. We need some rain too. We'll talk about that here in a minute. Also needing some rain, way down in Kansas, Director of Feed Procurement, Mr. Jake Kingsley, and I believe currently receiving some rain out in Fresno, California, Senior Feed Market Advisor, member of the Feed Foundations team at EverAg, Miss Natalie McCarty. Team, how are we today?
Doing very well this morning, Jim.
Is it our industry or is it just us as people that we talk about whether it's raining or not a lot?
Maybe a little bit of both.
Is it the business?
It's a little bit of the business. It starts there, but I think we are most of the problem.
I think we are most of the problem too, Jake. You and I have been doing this for a couple of years together, and it just weather's the default.
9 out of 10 shows probably has it.
Well, yeah, it's just, what else are we going to talk about? What else are we going to talk about? But we do have a lot to talk about besides weather, although it's a key factor. So, Paige, if you would kindly timestamp the broadcast, it's Thursday morning. It's about 10:20 Chicago time, and the grain and feed markets currently on the screens are red at the moment. So we've seen some strength as of late in the corn market. We kind of keep running our way for both December and March corn futures up to what have been some recent highs over the past couple months. We have December, though, pulling back this morning. It's down 7 cents. 7 cents at 4.05 and change. And we have March down to 4.24 and change here. So a lot of trading left in today on this Thursday morning, but this is one of the more aggressive downturns we've seen in this market as of late. So we're going to keep an eye on that, because really since that WASDE report a week ago or so, it's been in a more of an upward momentum. So we're going to get back to that here in a bit. We have Novi beans down slightly, about 4 cents, trading at 10.10 this morning. And we have December meal, that stubborn little byproduct, is holding steady right around $321 per ton this morning, and perhaps just a light amount of strength in the bean oil market, up about 50 points, maybe is adding some pressure to the meal market this morning. But there's a lot happening in these wild little feed markets. Jake, we're going to start off with you. We've covered our weather discussion of the day, although it's not just today, right? It's been a few weeks at least, really, in the Midwest where we have not really had a substantial amount of rain. It's become part of a dialogue, I think, amongst a lot of the folks that we are working with, and like what Britt O'Connell's team is working with from the grain marketing side of the EverAg squad. So in need of some rain here, but it also feels like combines are running. I mean, at least we're starting to make our way up into the I states now, where it's becoming a sight for some folks. So Jake, from your seat in Kansas, what are you seeing here this week?
Yeah, I think a lot of harvest down in this part of the world. At least the corn is kind of well underway. Some folks might even be finishing up already. The bean crop down here is certainly set pods and filling out. Haven't seen it turn just yet, but I imagine we're not far from it. Things look pretty darn good in this part of the world for as dry as it's been. And then talking with folks across the Midwest, so far, corn yields look very promising. I think there's a little bit of adjustment to be made there, being that this is some of the earliest acreage coming out. It kind of tends to be a little bit variable. Of course, some folks are getting out there early with some higher moisture in the kernel still, so you've got to adjust down for that. That leaves a little bit of uncertainty as what the final yield will be, but things look pretty darn good. We've been talking about basis having been down towards what we would call normal harvest values in a wide swath of the grain belt, probably since, the second half of July, after the crop was really established and folks had caught some timely rains to really push this thing along. And now we're starting to see even some of these pockets that had some acreage loss due to flooding and some washout early in the season. I wouldn't say they've got extraordinarily good basis numbers coming out of those parts of the world. There were some pockets where they just didn't know what the crop was going to be like at all. So they were holding back no offer, and they're starting to see some bushels, at least around them, that they'll be able to access and come out with some offers and get some grain moving. So good signs there. I think there are some spots that look very nice that are going to have some record yields potentially. This is going to be a big crop coming our way here. And I think Natalie's going to talk about it a little bit. We haven't quite seen basis breakdown on the other end of the rail line, but it feels like it's a matter of time, right?
Yeah, and Jake, I'll just real quick there. We had some bold predictions last week on this show, and you guessed an unchanged corn yield number. You were pretty darn close. I was quite wrong. I thought we'd be lowering that yield number by a couple bushels per acre. They raised it by a little bit, didn't they? So you're talking about all these record yields. You're seeing all these really good-looking fields. Turns out you knew what you were doing, Jake.
Everybody gets lucky once in a while. I was even surprised by an increase there. That's a pretty big number.
It's a pretty big number. And can this number hold? I think that's the big question in this market, because holy smokes, I think part of the reason, just to circle all the way back around then, part of the reason I had called for a slight reduction was because of this weather. Come on now, we can't have these massive yields looking like this without any rain for a few weeks. But then again, if the crop's already been made, what are we going to do with this thing? What are we going to do? So, Jake, you touched on some of the basis numbers and potentially being impacted. Natalie, what are you seeing then down the line? You're all the way out west here in California. Has there been any relief or change in the trend that you've been seeing?
No, I mean, basis out here remains very firm. So as that harvest starts in the Midwest, it's probably 3 to 4 weeks really before that new crop grain starts making it out here. So basis is still really firm at this point in time. I think there's some incentives being given if people do basis wise, if people do book out a little bit longer rather than shorter term. So we are seeing some breaks there, maybe on an off-March basis, for example, on corn.
And so, Natalie, we've seen the corn basis conversations then, and you said it takes a few weeks, right, to make its way out there after harvest, which we're not quite there yet either. Beans, even a potentially longer delay of you have to harvest those beans and then crush to produce that protein and then get it out west by you guys. What's been the impact on the protein market out west?
Yeah, again, old crop basis has been pretty firm still, especially in the canola space, with the rail disruptions we had still kind of influencing things on the front end. New crop basis is getting better on both canola and soy in general. I would still not call it back to historic lows. And also, I think there's some thought with this increased crush capacity coming on board in both canola and soy that we should be able to eventually get back to those type of basis levels. But it just kind of feels like it's going to take a little bit longer than it normally does. One big piece of information that came out this last week was the NOPA crush numbers. So that's the National Oilseed Processors Association came out with their numbers on September 16th. They reported what their members had crushed for the month of August. And that number came out very, very low. 158.008 million bushels of beans were crushed, way below trade estimates, and the lowest crush since September of 2021. And it was the lowest August since 2017. Okay, I think when you look at that, you could say, wow, but the thing you have to look at is that we had very strong June and July crush numbers. Processors do need to take their downtimes, and they obviously didn't take a lot of it in June and July, if you look at those crush numbers. So I think they had to shut down, grease the wheels, get everything cleaned out and ready to go so that they can crush big as we go forward.
Yeah, I think it's a great point, Natalie, because, so the NOPA figures came out beginning of this week. And I believe that NOPA represents roughly, say, 95 as a round number, 95% of the U.S. crush capacity. So to see that big drop off, I think for our team, the feed team here at Everag, the discussion was, is this a blip or is this a harsh reversal in trend? I think the sentiments, as you expressed, Natalie, was that it's not really a blip necessarily. This is natural, right? They ran very aggressively all last fall. They did take a pause, I think, for a month or two, late spring, early summer, but then really got back into it again. So I think it's natural for them to say, hey, this harvest is coming. This soybean production numbers look very strong. I know we emphasize corn a lot here on the show, and then we've emphasized protein, but being derived from that soybean crop, yields look good there too. And the balance sheet looks okay there too. So it's only natural for them maybe to pause for a second, kind of loosen back up a little bit, get ready for the big show, and then harvest hits and they can start to run again. So if that's the case, one could argue we should maintain a little bit of pressure still in this meal market for the time being. And then, Natalie, there's been a lot of chatter over the Chinese Canadian tariff situation. I believe the U.S. just this morning, maybe even like as we began recording, I think started to announce additional tariffs. That ultimately does have an impact on agriculture here in North America. Have you seen any impact yet on some of these discussions, or is this more of a longer term potential pressure for the soybean meal and canola meal market?
Yeah, I mean, I think it's still an evolving story, Jim. So what ended up happening, Canada came in and put on tariffs on electronic vehicles, 100%. And then they went ahead and put in a tariff of 25% on imported steel and aluminum from China. Almost back to that, China came out and said, okay, well, we're going to go ahead and investigate Canada for anti-dumping in their marketplace on canola seed. That's a really big deal because about half of the canola seed that goes out of Canada goes to China. So if all of a sudden China and Canada continue to fight and they don't import that amount of canola, that leaves a lot of canola seed in Canada. What does that mean for our guys? Potentially, if that happens, more canola available for domestic and therefore maybe better crush.
I think that's important to keep in mind, and especially like Natalie, for you representing a lot of folks out west, do you think that's a bigger impact where you sit versus maybe the Midwest?
No, I think in general, they've got extra capacity that they have built up in Canada at this stage of the game. So if they can crush more up there and have more cheaper seed available to crush, that should be good for the meal market, canola meal market in general. It just depends on where it goes. A lot of times, again, it depends on the year, but a lot of times part of the reason our markets in the West don't get quite as cheap is because when a canola crusher looks at where they can go, a lot of times California is one of the cheaper values, one of the cheaper places that they sell to. So I think sometimes maybe we see it delay a little bit more. Again, we're at the end here.
Yeah. Okay. That's a really interesting point. And especially, Jake, I think you thought that if you're going to punish Canada, you would go after maple syrup, right? That was your take on the situation. But instead they went after canola. So
yep.
Can't win them all, right? Can't win them all.
Maybe next time.
It's going to be very impactful, I think, as we move through the winter and the spring, especially as we look at our friends down in South America, how those folks are doing at this point. We had a guest on here a couple of weeks ago starting to already indicate some of the dryness down there. I think the northern and central areas of Brazil, they're always dry this time of year. So we keep that in mind. But it does seem drier than normal and a little bit warmer than normal. So if they're going to have a concern over their soil moisture heading into what will be their key planting window, that's just something we need to monitor. And maybe also then at least maybe keeps the world's eyes on the U.S. for a little bit longer. And maybe if there's going to be continued spats between China and North America, because the U.S., of course, is following a similar path as Canada, it'll be really interesting to see how that affects all of these respective markets. Jake and Natalie, how about our dear friend cottonseed? Is there any love for cottonseed here out west?
Yeah, I think we've been monitoring that one pretty closely here. And Natalie, you've been talking to some folks there in California specifically, but all eyes are on the Texas Panhandle right now. Their crop ratings are just a splash below the 5-year average, tremendously better than the last couple of years, but still trending lower, as is normal this time of year, coming in just a little bit below the 5-year average at this point. And the Southeast is looking moderately good. So we're not expecting any kind of a catastrophe or severe lack of availability here, but we probably don't see a major rundown in prices to the tune of $50, $60, $70 a ton like you may have in years where we had a very sizable crop. But I think there is room for this thing to still break a little bit, especially if the Panhandle can come in at 85 or 90% of normal yield. There will be some opportunity, probably very close to harvest. Natalie, I know you've been talking to some folks out there in California. How are they feeling about the crop out there and what they'll probably be able to bring in?
Yeah, I think the California crop overall is looking really good. But the thing you got to remember is, again, there's not a lot of it, in the grand scheme of things when you look at the cotton crop overall. So really, I think focus does have to stay on the key cotton producing states like Texas. A lot of our cotton comes out of Texas. And Texas, in the report that came out on Monday, was about 22% harvested. So, and to your point, they're just a blip below 5-year average. Same thing with the U.S. cotton crop.
So what we've been talking with folks is be looking, you get into October when they're really getting harvest moving, and maybe even early November as seed starts to make its way out of the gins and onto rail lines. That'll probably be our chance to get some purchasing done. Feels like if you want to step in now and buy the first chunk, especially with milk prices where they are, we're not doing a whole lot of work of talking folks out of that, but do think there is potential for maybe a $15 or a $20 a ton break lower here as we get closer to harvest and define the crop. And then maybe you catch one more break similar size again as the gins are really cruising along. And then after that, typically you get to the middle of November and it bottoms out and starts to slowly grind its way higher. So we're defining a timeline at the very least here, I think.
Yeah, and I think the seasonal harvest pressure is going to be the name of the game for all of these respective commodities. And I think we're banking on it a little bit, right? We saw the lows achieved in the soy complex and in corn futures wise about a month ago or so here, right at or after that August WASDE report. We have seen this strength. We've seen managed money covering some of their large net short positions in corn, meal. They continue to maybe rebuild that net long. That's kind of been a theme now for a few weeks, but it still holds true. Managed money is still net short, but not nearly as sizable as it was heading into August. We have to keep that in mind because, yes, I think we're banking on a final push lower given natural and seasonal harvest pressure. But after that, I think we need to be ready to pull the trigger on another pretty decent chunk of purchases here, because as you indicated, Jake, it's not just for cotton and cottonseed. Our corn and bean and meal markets also generally elevate then through the winter as we do wait to see what's happening with the South American crop and pushing into the spring. So those patterns we need to keep an eye on. And also, Jake, your dear friends at the Fed yesterday got pretty aggressive, 50 basis points, 55-0. It's the start of something, perhaps. We'll knock on wood and hope that everything's moving in the right direction. But we've had some really interesting notes and charts from Phil and the Insight Squad of what it looks like when it feels like interest rates have peaked and the strength of the U.S. dollar has peaked. Perhaps that net short position from managed money in our markets, it hits its bottom. So there is a trend and a correlation of interest rates breaking or lowering and managed money starting to decrease its net short and or building a net long in our agricultural market. So we got to keep an eye on all of this fun stuff. Lots of fun stuff as we head into the fall. In the meantime, excellent work to you both. A huge thanks for being here. Natalie, great having you on the show today. Thanks for being with us.
You bet.
Very cool. We'd also like to thank Corey and the Everag Insights crew for their support. Thank you to Paige for production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.